In 2023, iLearningEngines reported $421 million in revenue, but according to federal prosecutors, at least 90% of that revenue, more than $379 million, was fabricated. This was not a small accounting error. Prosecutors alleged a system built around sham contracts, fake customers, entities controlled by employees, friends, and family members of company executives, and round-trip money transfers designed to make fake revenue look real. The company was iLearningEngines Inc., traded on Nasdaq under the ticker AILE, a ticker that directly echoed the promise of artificial intelligence. At its peak, the company reached a market capitalization of roughly $1.5 billion, and its stock traded near $18. Less than a year after its public market debut, the stock was suspended from Nasdaq trading, the company was in bankruptcy, all employees had been terminated, and the case had moved toward liquidation. Then, on April 17, 2026, the company's CEO and CFO were indicted in the Eastern District of New York. This is the story of how an AI company went from a billion-dollar public market debut to bankruptcy, liquidation, and criminal charges. iLearningEngines, Inc. was founded in 2010 by Puthugramam Harish Chidambaran in Bethesda, Maryland. The company presented itself as a technology platform focused on artificial intelligence for corporate learning and work automation. Its product was described as an AI platform for enterprise learning and workflow automation. On paper, the business looked like the kind of company public markets had been trained to reward: software, enterprise customers, automation, and artificial intelligence. The company said it served more than 1,000 enterprise customers across healthcare, insurance, education, and manufacturing. That kind of customer base suggested scale. It suggested product-market fit. It suggested that iLearningEngines was not just another speculative AI story, but a functioning enterprise software company with real adoption across multiple industries. The company's narrative arrived at a powerful moment. Artificial intelligence had become one of the most valuable labels in the public market. A company that could credibly connect itself to enterprise AI, automation, and corporate training had access to a story investors already wanted to believe. But prosecutors later alleged that the story investors saw was not the story inside the company. According to the indictment, the alleged fraud period ran from January 2019 through April 2025. That timing matters. It means the alleged scheme was not limited to one quarter, one transaction, or one short-lived mistake. Federal prosecutors alleged a multi-year fraud that reached across the private company period, the public listing, and the aftermath of the company's debut on Nasdaq. To the outside world, iLearningEngines looked like a company riding the future of AI. To prosecutors, it was a company whose reported financial performance was built, in large part, on fabricated revenue. The central allegation was simple, but devastating. The company's revenue was not what it appeared to be. On April 16, 2024, iLearningEngines went public through a SPAC merger with Arrowroot Acquisition Corp. The transaction valued the company at an enterprise value of approximately $1.4 billion. The company began trading on Nasdaq under the ticker AILE, a direct reference to AI. For a company selling an artificial intelligence platform, the ticker was more than a symbol. It was a marketing statement compressed into 4 letters. The company did not need to explain the theme. The market could read it instantly. In April 2024, the moment had a particular gravity. Institutional investors were watching every company that could attach itself to artificial intelligence, searching for the next enterprise platform that might turn automation into recurring revenue. A SPAC with an AI identity did not arrive quietly. It arrived with the mood of a shortcut. A private company stepping through the side door into public markets, carrying the language of software, scale, and machine intelligence. The ticker made the pitch even sharper. AILE looked built for the tape, built for screens, built for a market that wanted exposure to AI before the opportunity felt fully priced. The story did not need spectacle. It had the ingredients Wall Street understood: enterprise customers, automation, a public listing, and a name that sounded like it belonged to the future. At its peak, iLearningEngines reached a market capitalization of roughly $1.5 billion. Its stock traded near $18. The public market story was clean. A company founded in 2010. a platform built for AI-powered corporate learning and work automation. More than 1,000 stated enterprise customers. Exposure to healthcare, insurance, education, and manufacturing. A public listing at the height of investor interest in AI. The company appeared to have what every AI market story needed: scale, a large, addressable enterprise audience, and a ticker that left no doubt about the category it wanted to own. But according to prosecutors, the numbers behind the story were being artificially constructed. The indictment alleged that iLearningEngines used sham contracts with entities controlled by employees, friends, and family members of company executives. Those contracts allegedly created the appearance of legitimate customer revenue. The indictment also alleged round-trip transfers. In that structure, money was sent to fake customers, and those customers returned the money to the company in a way that made it appear as if the company had collected real revenue. That method is powerful because it can make a false transaction look like a real business cycle. A contract appears to exist, money appears to move, revenue appears to be collected. But if the customer is not real, or if the cash is simply being routed back to the company, the transaction does not prove commercial demand. It proves only that money moved in a circle. The public saw reported revenue. Prosecutors alleged that much of that revenue was manufactured through sham contracts and round-trip transfers. That distinction is the heart of the case. Real revenue is evidence that customers are willing to pay for a product. Fabricated revenue is evidence that someone wanted the market to believe customers were willing to pay. For a public AI company, that difference can mean everything. The more revenue iLearningEngines appeared to generate, the more credible its AI platform appeared. The more credible the platform appeared, the easier it became for investors to see the company as a scaled enterprise AI business, rather than an unproven technology story. That was the rise. A company with a compelling AI label, a Nasdaq ticker that reinforced the theme, a public market valuation of approximately $1.4 billion at the SPAC transaction, and a peak market capitalization of roughly $1.5 billion. But the same story that made iLearningEngines attractive also made it vulnerable. Because when the market buys a company for its growth story, the numbers must survive scrutiny. And in August 2024, that scrutiny arrived. On August 29, 2024, Hindenburg Research published a report on iLearningEngines. The title was blunt: An AI SPAC with Artificial Partners and Artificial Revenue. The report alleged that iLearningEngines had fabricated revenue, that a related technology partner was central to the company's results, and that some customers did not exist. For a company whose value depended on the credibility of its enterprise AI revenue, the allegation struck at the core of the public market narrative. Before the report, iLearningEngines had already fallen far below its peak. After the report, the stock dropped from around $3 to below $1.50. The company responded by calling the report misleading statements and typical short seller tactics. That response followed a familiar pattern. A short seller publishes allegations. A company rejects the report. Investors are left to decide whether the allegations reveal fraud, exaggerate weakness, or serve the short seller's financial interest. But the turning point was not only the report itself, it was what happened next. In September 2024, the company formed a special committee to investigate. That step changed the tone. The issue was no longer just an external attack from a short seller. It had become serious enough for an internal investigative process. What the public did not yet know was the full scale of what prosecutors would later allege. According to the DOJ indictment, the company's reported 2023 revenue was $421 million, and at least 90% of it, more than $379 million, was fabricated. Prosecutors would later describe sham contracts with entities connected to employees, friends, and family members of company executives. They would also describe round-trip transfers in which money was sent to fake customers and then returned to iLearningEngines to simulate legitimate revenue. That is why the Hindenburg report mattered. It did not end the company overnight, but it cracked the surface of the story. Once that surface cracked, the sequence accelerated. By late 2024, the question was no longer whether iLearningEngines was a high-quality AI company. The question was whether the company could survive the investigation into its own numbers. The collapse unfolded quickly. In August 2024, the Hindenburg report was published, and the stock fell from around $3 to below $1.50. In September 2024, iLearningEngines formed a special committee to investigate. Then came November. In November 2024, the company's CFO was placed on leave. That same month, the company's auditor withdrew prior opinions. Also in November 2024, the SEC issued a subpoena. For any public company, those three events are severe. A CFO placed on leave signals internal instability around financial leadership. An auditor withdrawing prior opinions raises questions about previously issued financial statements. An SEC subpoena signals regulatory scrutiny. For iLearningEngines, they came almost together. On December 10, 2024, 5 executives were placed on leave. On December 27, 2024, all 5 resigned. Between those 2 dates, the company entered bankruptcy. On December 20, 2024, iLearningEngines filed for Chapter 11 protection in Delaware Bankruptcy Court. 3 days later, on December 23, 2024, Nasdaq issued a delisting notice. On January 2, 2025, trading in iLearningEngines shares was suspended on Nasdaq. The speed was extraordinary. A company that had completed its SPAC merger on April 16, 2024, saw Nasdaq trading suspended on January 2, 2025. That was less than 9 months from public market debut to trading suspension. The human cost became visible soon after. On February 14, 2025, all employees were terminated. On March 6, 2025, the bankruptcy case was converted to Chapter 7 liquidation. Chapter 11 is often associated with attempted reorganization. Chapter 7 means liquidation. The direction had changed from survival to wind down. Then came the criminal case. On April 17, 2026, CEO Puthugramam Harish Chidambaran and CFO Syed Farhan Ali Naqvi were indicted in the Eastern District of New York. Chidambaran was 57 years old and from Potomac, Maryland. He was arrested at his residence in Potomac, Maryland. Naqvi was 44 years old and from Fulshear, Texas. He was arrested in San Jose, California. The indictment contained 10 counts in the Eastern District of New York and Brooklyn. The charges included operating a continuing financial crimes enterprise, securities fraud, wire fraud, and conspiracy to commit securities fraud and wire fraud. The continuing financial crimes enterprise charge carries a maximum sentence of life in prison. The indictment also described compensation received by CFO Farhan Naqvi. Naqvi received $650,000 in salary and bonus during 2023 and 2024, $11.2 million in stock after the IPO, and $4.4 million in cash to cover income tax on the sale of those shares. A company once valued around $1.4 billion at its public market transaction was gone from the operating stage, pushed into liquidation, and at the center of a federal criminal case. The iLearningEngines story is not just about one company. It is a case study in how powerful market narratives can overwhelm basic verification. Artificial intelligence gave the company a compelling theme. The Nasdaq ticker AILE reinforced that theme directly. The company described an AI platform for corporate learning and work automation. It reported more than 1,000 enterprise customers across healthcare, insurance, education, and manufacturing. It entered the public market through a SPAC merger with Arrowroot Acquisition Corp. On April 16, 2024, at an enterprise value of approximately $1.4 billion. At its peak, its market capitalization reached roughly $1.5 billion. Those facts created the appearance of scale. But prosecutors later alleged that at least 90% of the company's $421 million in reported 2023 revenue was fabricated. That is the first lesson. In a hype cycle, revenue quality matters more than revenue size. A large revenue number can make a company look mature. But if the revenue comes from sham contracts or round-trip transfers, the number is not proof of demand. It is part of the illusion. The second lesson is about SPACs. A SPAC transaction can bring a company to the public market quickly, but speed does not eliminate the need for scrutiny. iLearningEngines completed its SPAC merger on April 16, 2024, and trading was suspended on Nasdaq on January 2, 2025. The third lesson is about fraud detection. The warning signs did not arrive all at once. First came the Hindenburg report in August 2024. Then the company formed a special committee in September 2024. Then the CFO was placed on leave, the auditor withdrew prior opinions, and the SEC issued a subpoena in November 2024. Then executives were placed on leave, bankruptcy followed, Nasdaq moved toward delisting, trading was suspended, employees were terminated, and the case moved into liquidation. Fraud detection is rarely one signal. It is usually a pattern. The pattern becomes clearer as each event confirms that the original story may not survive inspection. The final lesson is the simplest one. When a company's value depends on a perfect story, the numbers must be real. In iLearningEngines, prosecutors alleged that the numbers were not real. A billion-dollar AI story can rise quickly, but when revenue is artificial, the collapse can be even faster. This video is for educational and informational purposes only. All information is sourced from publicly available documents, regulatory filings, and credentialed news organizations. Source links are available in the description.